lesson is about accounting equation. We're going to have a session of accounting equation. So if we're talking about accounting equation, what do you know about accounting equation? Yes, Samu.
Okay, Miss, the accounting equation is all about recording whatever we take from our business.
Yes, it's about recording everything that is happening in the business. Do you have any different idea? Yes.
Yes, I think it's about asset, which I can mention, which is cars, also cash.
Yes. Okay. Accounting equation is also called balance sheet equation. It represents the relationship between assets and liabilities of a person or a business. So that means that it is a foundation of a double entry system. For each transaction that is happening on a debit side, there must always be a credit side. So it must always balance. Okay? So the key principle of accounting equation is that the stuff that the business owns must always equal to the stuff that the business owes. Okay? So stuff that the business owes, we refer them as assets. As you mentioned, that it's cars, cash, inventory, and
Cars, cash, inventories, and mostly our buildings and equipment.
Yes, buildings and equipment. And then, so if we're talking about accounting equation, we have three elements. We have assets, owner's equity, and liabilities. So owner's equity, it's whereby we're talking about retained earnings, stockholders, and borrowers. Those are owner's equity of a business. And then our last component is liability. Liabilities, we're talking about loans and we're talking about account payables. Those are liabilities. Okay. So how do we define assets? Assets is stuff that the business owns. Everything that belongs to the business is an asset. And then we have, on the other side of the equation, we have two different words. So stuff that the business owes, it depends on who the lenders are. If we're talking about that we owe a third party, and then we're gonna mention those as a liability. But if we owe an owner of a business, then we're gonna refer those under the category of owner's equity. Okay. So we have three elements. Assets, owner's equity, and liabilities. So which means assets is equal to owner's equity plus liabilities. Okay, so let's just take this into account. We said we have inventory. Inventory is a stock that we sell in the business. Okay, let's say for example, in this business I'm going to say we're selling popcorns. Okay, so popcorn is a stock that we're going to sell to our customers. Okay, yes, and we have cash in a sort of bank account, whereby if we make a sale on cash and then we're going to withdraw some money from the bank, and we have a high increase of which is cars that maybe we're going to use to stock up the inventory, or we're going to use to deliver our service to our customers. Okay, and then if we're talking about retained earnings, we're talking about the profits that we will keep aside for the future use. So it's not like everything that we make in a sort of a profit that we're gonna use. No, some of them we have to keep it aside in case in future we wanna expand our business, and then we're gonna use that a certain amount to do that. And then we have liabilities. Liabilities, we said it's a loan or it's account payables. So in this business, we're dealing with popcorns. Let's say I decide to go to the wholesaler whereby we stock up popcorn seeds, and I made a purchase on accounts, on credits. Né? So that means there's no cash that we're gonna withdraw from our bank accounts. We're gonna purchase on a credit. So that means we must settle that debt in future, okay? So in our books, we're going to recognize the transaction as account payables. And then let's say we short, like we need a vehicle, or maybe we need some machinery to make our production to be fast, and we do not have enough cash for that. So we decide to make a loan from the bank. So that amount in our books is gonna be recognized as a liability, because we have to settle that amount in the future as a loan requirement and interest on loan. Okay? Yes. Do you have any questions so far? Are we still on the same page?
Yes.
Yes, still on the same page. Okay. So these elements must be recorded on a debit side or on a credit side. Like I said earlier on, it's all about the double entry system. What happened on a debit side, it must also happen on a credit side. So we have assets. Assets increases on a debit side and it decreases on a credit side. So that means if we buy something, if we buy popcorn seeds, that means the stock is going to increase with that amount that we bought. Let's say, for example, we bought the popcorn seeds on cash at a price of 150 rand. Okay, so that means the popcorn seed that we had is going to increase with 150, right? Do you understand?
Please repeat that.
Okay. Let's say we had 10 kg of popcorn seeds, okay? And then I decide to go to a wholesaler and buy another 10 kg of popcorn seeds at a price of 150. So the 10 kg that we had, it's going to be added with another 10 kg that I recently bought, okay? Yes. So that means the 150 rand, it's a value of a 10 kg that I recently bought, okay? So we said inventory is an asset, okay? Yes, and an asset increases on which side?
On the
debit side. Okay. So we're gonna say inventory, the value of 150. Okay. He said we made this purchase on cash. So that means from our business accounts we withdraw 150, right? So that means the balance that we had is it going to decrease or it's going to increase?
Since you withdraw 150 from it, that means it's going to decrease.
Yes, it's going to decrease. And a cash, we said is it an asset, equity, or a liability?
Our cash is actually our asset.
Yes, it's an asset. So our assets decreases on which side?
On the credit side.
On the credit side. So that means we're going to have cash of 150. Okay? Yes. And then we have equity. We have liabilities. So our second transaction, the owner of the business withdrew 500 rand from the business account for his personal use. Okay, let's say Skumbuzo and I are the owners of the business, right? And then I decide to withdraw 500 rand from the business account for my very own personal use. So whatever that I'm gonna use with the 500 rand, it's not related to the business, okay?
Yes.
So if I withdraw 500 rand from a business account, is cash going to increase in a business account, or is it going to decrease?
It's going to decrease.
Yes, it's going to decrease. So if it decreases, it's going to decrease on a credit side with the 500 rand that I withdraw, okay? And then we said that my drawings, they are equity of in the business, they are equity. If I decide to take something from the business for my very own personal use, that means the equity of the business is going to decrease, because I just took it and I didn't pay for it. And our equity, it decreases of which has debit side, right? So it's drawings. I withdrew 500 rand. Okay. So now we can see that we said everything that happened on a debit side, it must always be corresponded to a credit side. As we can see here, inventory on a debit side, and then cash, same amount on a credit side. So it's balanced, right? And then we have cash that we withdraw on a credit side under assets, and then we have drawings on a debit side. So it's balanced, it's much balanced always, okay? Okay, now our last transaction is about loan. We made a loan from the bank. We borrowed cash from the bank of a value of 5,000. Okay. So I decided to go to the bank and say, I need a loan of 5,000 rand because I want to buy machinery for my production. Okay. And then they decide to give me 5,000 rand. And if they give me 5,000 rand, that 5,000 rand, it's going to go directly to a business account. So if there is an inflow of cash in a business account, is it going to increase or decrease? And the assets?
An inflow means that our business is gains.
Yes.
The gain for our business.
So that means it's going to increase.
It's going to increase.
Yes. There is cash of 5,000 rand. And then that means now we owe a bank, right? That means we owe a bank 5,000 rand. That 5,000 rand we must pay the bank. So that means now we are liable to pay 5,000 rand back to the bank, right? So that means the 5,000 rand is a liability to us. Okay, we are liable to pay 5,000 rand back to the bank. So that means our liabilities are increasing with, it's a loan with 5,000 rand, right? It's increasing with 5,000 rand. So now we can see that under assets on a debit side, we have 5,000 rand. And then that 5,000 rand, we also have it on under liabilities, of which is 5,000 rand. So how can we be so sure that these things is balanced? We can just say, we said earlier, assets equal to owner's equity plus liabilities. Okay. Okay. So we're just gonna take as it is from T accounts to this side, okay? So we said inventory is 150, right? And which sign is it? Plus sign, right? So that means we have plus 150, and then also under assets, what amount do we have here to correspond? It's 150, right? Under which sign? Negative. So we have minus And also our second transaction, of which is 500 rand, that we withdraw from a business account. It's under which sign? Negative. And it's under asset, right? Shooting, it's minus 500 rand. And then also under equity, we have drawings, of which is 500 rand. Under which sign? Negative, right? Okay, that means we have negative 500. Also under assets, we have a value of 5,000 rand, of which it was a loan. Okay, under which sign? Positive. So it's plus 5,000 rand. Also under equity, we have 5,000 rand. Under which sign? Plus. Positive. Okay, so it's plus 5,000 rand. So here you must always take note of the sign. If you're adding this and you make a mistake here, it's not gonna balance. So if we say 150 minus 150, how much is it? 0, right? Yes. So that means you have 0 here. We have 0. If we say 5,000 minus 500, how much do we have? 4,500. So total here we have 4,500. So on this side, we said owner's equity plus liabilities. We must add them together. So that means 5,000 minus 500. How much do we have?
4,500.
Should see on this side, we also have 4,500. So that means our accounting equation has balanced. So do you have a question? Okay, now ask a question. Just to make sure that we're still on the same page and we understood each other. Do you have a question? Any question? No question. Okay. But I do have a question. Okay. We said we have assets, equity, and liabilities. Okay. And those three are the elements of accounting equation. If we add, we said assets must always equal to equity plus liabilities. Okay. But then before we got here, we said that my assets are going to increase on which side?
On the debit side.
On debit side, yes. And we have equity, and then our equity is going to decrease on which side? Debit or credit?
Debit side.
Debit side, yes.
Negative.
Yes, it's going to decrease on the debit side. So that means assets, owner's equity, and liabilities are vice versa of assets. Ne? Assets, if it increases on a debit side, that just know that equity and liabilities, because they are expense, they're going to decrease on a debit side. Yeah, it's gonna be like that always. Okay? Yes. So before we conclude our lesson, I'm going to just give you the homework. Okay? Please make a list of everything that belongs under assets. So I want examples of assets, equity, and liabilities. And also know the definitions of assets and liabilities. As I mentioned earlier on, that if we're talking about assets, we're talking about the stuff that the business owns, everything that belongs to the business, right? And then equity, liabilities, we're talking about stuff that the business owns. So I'm expecting that tomorrow you will be able to master that activity. Thank you. That's all for today.
A is a 1, C